Hey friends, happy Friday. Scott Smith with the Smith team at Keller Williams. Wanted to share with you some insight about some news that broke earlier this week, and that is that the Federal Reserve decided to not cut interest rates. Everything that we had been hearing the previous 6 to 8 months was that once we hit summer, they were expected to cut interest rates for the short-term interest rates, which indirectly impacts long-term mortgage rates. So how is this going to impact the real estate market? I've got two different points for you that are positive and two that are negative. The first thing is, how do interest rates, with the Fed making the cuts or not making the cuts, how does that impact our mortgage rates? And they're actually two different things, but they are somewhat related. What the Fed rate is more of a short-term borrowing rate, whereas obviously mortgage rates are longer term, 15, 20, 30-year mortgage rates. So, and why does the Fed not want to cut the interest rates? Why did they decide to do that? And we keep hearing terms like soft landing, and they want to slow down spending. The good old US of A economy is chugging along and keep going strong. Different market segments are stronger than others. So that is what the Fed is seeing, and they're making their fiscal decisions based on that economic data. So the first two things that I want to share with you that are positive when it comes to the Fed not cutting interest rates. It's really kind of the two sides of the coin from a buyer's perspective and a seller's perspective, is we're going to be sliding into more of a balanced market. And we've seen this trend probably over the last, I would say, probably 6 to 12 months, more so as we're getting into the spring market and the summer market time. So what that means is that we're seeing more balanced inventory, more longer market times, and then also a little bit slower demand. So those are some positive aspects of it. And from a buyer's perspective, point number two, it gives a little bit more opportunity to either negotiate on some of those properties that may be a little bit overly optimistic when it comes to price. And it also gives you a little bit more selection for those properties. So definitely swinging more into a balanced real estate market in the Twin Cities. The two negative aspects of it is obviously the interest rates will probably still be a little bit higher. And when we see those interest rates drop into the sixes, we're going to see more and more buyers jumping back into the market. That's going to drive up prices again. So it's kind of a catch-22 or a double-edged sword or whatever metaphor you'd like to use. But the negatives, we're still in interest rates in the upper sixes, right around 7 plus or minus, depending on which day you're looking at. And so we're seeing those rates, historically speaking, they're still a great interest rate. Anyone that owned a home pre-1995-ish saw interest rates that were north of 7%. And so anything that we see that's at that price point or lower is actually a really good thing. So what we're also seeing is the negative is some markets, we're actually seeing prices softening, and some of them quite a bit. The Twin Cities real estate market, we're actually up about 4%, which is historically the average year over year. We're still seeing multiple offers on some of those properties that are either unique or they are have premium condition and a strong price. Aggressive price with them. So we're seeing some markets across the country. Florida, in fact, is one market where it's actually settling down. The Pacific Northwest is settling down. So we're kind of keeping an eye on what's happening across the country. But the Twin Cities, we don't have the real strong peaks in the valleys like some of those other markets do. We're pretty steady all the way across the board. So it's a good opportunity for our clients to buy a home. We've had some great transactions with our clients, and they're getting some good deals and for both buyers and sellers, and we're taking advantage of the current market conditions. So if you're looking to make a move either now or in the next 6 months, certainly reach out to us. We can kind of get you prepped, ready to go to hit the ground running when it comes time to make a move. So certainly reach out to us, 651-777-3434. Have a great weekend, and we'll see you next week. Bye now.